Palantir Technologies has established itself as one of the most talked about and best performing stocks across the market over the past 2 years. After delivering a staggering rally that pushed the share price to more than 4 times its earlier level during 2024, the stock has continued its surge this year, climbing by more than 147%. With gains of that magnitude already on the board, investors are now asking the inevitable question of whether this momentum can realistically carry forward into 2026. To answer that, it is important to step back, examine the company's origins, understand its evolving business model, and weigh the impressive growth story against an undeniably expensive valuation. Palantir's roots trace back to its early days as a data aggregation and analytics company built almost exclusively to serve the United States government. The founding vision was inspired by the same pattern recognition technology once used by PayPal to identify fraudulent transactions, with the idea that similar techniques could be applied to counterterrorism and national security challenges. Palantir's software was designed to pull information from fragmented and disconnected government databases, unify that data, and then analyze it to uncover hidden and complex relationships. Over time, this capability made Palantir a trusted partner for government agencies that rely on data-driven decision-making. Even today, the United States government remains the company's largest customer, and Palantir has become deeply embedded in efforts to modernize government operations, particularly within military and intelligence organizations. While government work built the foundation, the next phase of growth has come from Palantir's deliberate expansion into the commercial sector. This shift has been powered by the company's artificial intelligence platform, which has fundamentally changed how businesses interact with data and artificial intelligence tools. Instead of chasing headlines by attempting to build the most advanced large language model, Palantir took a more pragmatic and arguably more strategic route. The company focused on the workflow layer and application software that sits on top of artificial intelligence models, with the goal of making these technologies useful, reliable, and deployable inside real organizations. At the heart of this strategy is a platform that collects an organization's data from a wide range of internal and external sources, cleans it, and organizes it into a structured ontology. This ontology then links data directly to real-world assets, processes, and operational decisions. By starting with clean and well-structured data, Palantir dramatically reduces the risk of artificial intelligence hallucinations. This is especially important for organizations operating in high-stakes environments where inaccurate outputs can lead to costly or even dangerous consequences. In many ways, this approach allows the artificial intelligence platform to function like an operating system for artificial intelligence, providing a stable foundation that allows customers to deploy whichever artificial intelligence model best suits their needs while still extracting maximum value. As a result, the artificial intelligence platform has become an increasingly important part of the broader artificial intelligence ecosystem. It is no longer confined to a single industry or use case. Instead, organizations across a wide range of sectors are using the platform to solve very different and highly specific problems. Energy companies rely on it to optimize pipeline maintenance and reduce downtime. Healthcare systems use it to monitor patients and detect early warning signs of sepsis. Insurance firms apply it to improve underwriting accuracy and manage risk more effectively. These real-world applications highlight why Palantir's approach has resonated so strongly with customers looking for practical artificial intelligence solutions rather than experimental technology. This growing adoption has translated directly into accelerating financial performance. Since the launch of the artificial intelligence platform in 2023, Palantir's revenue growth has picked up speed with every passing quarter. Revenue expansion rose from just 13% in Q2 of 2023 to 63% in the most recent quarter. A significant portion of this growth has been driven by United States commercial customers, where revenue surged by 121% year over year in Q3. This trend shows that Palantir is not only winning new clients, but also successfully expanding its relationships with existing ones. Customer metrics further reinforce this momentum. In the most recent quarter, Palantir's total customer count increased by 45% year over year, reflecting strong demand for its platform. At the same time, net revenue retention reached 134% over the past 12 months. Any retention figure above 100% indicates that existing customers are spending more than they did previously, and this measurement only includes customers who have been with the company for at least a year. Even newer customers are scaling their usage rapidly, suggesting that once organizations adopt Palantir's software, it quickly becomes a core part of their operations. Despite all of these positives, valuation remains the most significant risk factor. Palantir stock currently trades at a price-to-sales multiple approaching 70 times analyst forecasts for 2026. This figure is based on revenue rather than earnings, which already places the stock at a premium compared to most software companies. Looking at profits instead, the forward price-to-earnings multiple sits around 183, underscoring just how much of future success is already baked into the share price. Given this elevated valuation and the enormous gains the stock has delivered over the past 2 years, buying aggressively at current levels may not offer the most attractive risk-to-reward setup. Even companies with exceptional long-term potential rarely move in a straight line. Many of today's largest and most valuable companies experienced periods where their share prices were cut dramatically before eventually resuming their upward trajectory. Palantir is unlikely to be an exception to that pattern. In the broader context, Palantir clearly has the ingredients to become one of the most influential and important artificial intelligence companies in the world. Its deep ties to government agencies, expanding footprint in the commercial sector, and differentiated approach to artificial intelligence deployment all provide strong long-term tailwinds. However, patience may be required. For investors already holding shares, the stock appears well suited as a hold or a buy, depending on your long-term strategy. For those looking to initiate or expand a position, waiting for periods of market weakness may offer a more favorable entry point. Ultimately, Palantir sits at the intersection of extraordinary growth potential and significant valuation risk, making it a stock that demands both conviction and discipline. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.